For a lot of people, it's just the simple fear of investing so much money in an asset that is like 2,000 miles away. And then also leaving the management of that asset up to somebody else. It's the fear of giving up control. At the same time, it's some of the fears that I talked about before, like what if I bought a house with a crappy rehab? What if the property manager sucks? All those fears come up. That's why I kind of created this program. It's like, well, let's go through each one. Let's answer the question of how to maximize the odds that we don't fall into that pitfall.
Hey, what's going on, everybody? Joel Irway here, and welcome to another episode of Experts Unleashed. I am super excited because we have a very, very special guest here today by the name of Jim Beavens. Now, Jim is a good friend of mine. We've connected over the past few weeks or so, and as I've gotten to learn more about who Jim is and what Jim does, I've gotten really, really excited about his mission and how he helps people kind of scale their passive income through real estate without sacrificing all their time or needing to make a full-time career out of this. And so Jim and I have had a couple of conversations before, and I knew that I had to get him on this show and really pick his brain a little bit more because it is a wild, wild topic. I have experience with real estate. I've gotten my hands dirty. I know the power of passive income through real estate. And talking to another fellow engineer who has reverse engineered this entire process, I know that you guys are going to get tremendous value out of this conversation. Jim, welcome to the show, my man.
Thanks so much, Joel. Thanks for having me. It's great to be here.
Jim, why don't you give my audience kind of a quick 30 or 60-second introduction as to who you are and how you help people with scaling their passive income through real estate?
Sure. So I am an engineer. I have a 28-year career in engineering. It kind of makes me feel old when I say that, but very successful career. And about 2.5 years ago, I pivoted my retirement strategy to real estate, away from 401k, away from the accumulation model, towards cash flow. And I started sharing my story on LinkedIn about how I would close on properties. I built up a portfolio, got 4 properties, 5 properties, 6 properties. People started asking me, what are you doing? How are you doing that? And there was enough interest. I thought, well, let me show you. And I went ahead and put some thought into it and came up with this program called Cash Flow Engineers. And so I started this business, this educational program called Cash Flow Engineers, where my purpose is to teach engineers and high-tech professionals how to scale passive income through real estate without diverting time or energy from a demanding career.
That's interesting. So you got away from the traditional 401k, right? Where did that idea come from? You've got your full-time job. Everyone's been taught for the most part in the past, 20, 30 years or so to really focus on a 401k. Why did you decide to buck the trend, buck the system? Where did that come from?
Honestly, it was out of desperation. I didn't have much choice. Life had thrown me a lot of curveballs. I was coming out of my second divorce in my late 40s. My retirement funds was not where it should be. And I was faced using the traditional methods that we're all taught. I was looking at working well into my 60s, probably my 70s, and I can't even guarantee I could have quit then. So yeah, that was a forcing function to get me to look around and say, how else can I do this? And, I would add that almost 25 years ago, I read Rich Dad, Poor Dad. Like, I've always been intrigued by real estate. I've made attempts to get into it. So it's always kind of been in the back of my mind, but I never found a way to make it work. And so kind of put those two together, kind of desperation. I got to find something that works. And, and then this prior interest, then yeah, I was turned on to this methodology that, that we can talk more about, and found a great community of other investors, which is always a big part of it. And I was off and running and went and started building my portfolio.
And so out of curiosity, the 401k method, because of life circumstances and whatnot, it wasn't going to allow you to retire at a time that you wanted to retire. Was that just simply because it was going to take too long for the matching amounts were not going to be high enough? What was limiting you? What was preventing you from growing your retirement as fast as you want with a traditional 401k?
Right. Well, the bottom line is I didn't have enough saved up. I mean, we all know the power of compounding, right? We talk about compound interest, how great it is, how awesome it is. But, if you look at a curve of compounding growth, if you just look at just a normal growth curve, the good stuff doesn't happen until the last 5 years, right? If we look at a 30-year time frame, those first 15 years, they're pretty boring. there's not a lot of growth happening. You're the one that's contributing most of the money. The interest doesn't really start stacking up until later. And so just with where I needed to be, I was going to be the main driver of my savings. And just looking at how much I could save, it didn't pencil out. It's like I either needed to save 20, 30, 40 grand a year, or I needed to earn like 30% returns, or, the math just didn't work. Compounding looks great when you've got a 30-year time horizon. But when you've only got, if you want to do, if you want to quit the rat race in 10 years or less, that doesn't work. What we're taught of just put money away and lock it away and just let it grow at, some normal rate. It just doesn't work. The math doesn't add up. And some would argue, some would argue that the math doesn't exactly work even if you look at 30 years. That's a whole nother topic, but yeah.
So you needed something to work that could work faster for you, bottom line.
Yes.
Awesome.
Exactly.
So what's the big idea with how you can help full-time professionals get started with passive income through real estate?
Yeah. So of course we talk about real estate. There's lots of different types. There's lots of different ways to invest in real estate. You can do wholesaling. You can do flips. You can rehab properties. You can do the BRRRR method where you buy and rehab and then refinance out and then you rent it out. That's the most common form of long-term accumulation is you buy cheap properties, put work into them, put money into them and create forced equity. And now you don't have a lot of money into it. And that allows cash flow to happen. And then you can hold on to it. Or sometimes in these more expensive markets, sometimes you just buy a property that barely cash flows or maybe cash flows negatively. And then you're just you're holding on for dear life, by your fingernails until the values go up or the rents go up. So those are kind of the traditional ways. And what I was turned on to, and this is nothing new. It's been around for probably for about 15 years, pretty much since 2008. It's the turnkey investing model. There are companies in specific markets. This isn't everywhere. It's only in affordable markets, particularly the South and the Midwest, where they are selling affordable homes to investors with tenants already in place. They handle the property management, and out-of-state investors can come in and they put their 20% down. They get an 80% loan and basically buy the property at retail price. But even at retail price, it still cash flows because it's in an affordable market. And so this is a method that's not terribly sexy. You can go on Bigger Pockets and you can find people that do this, but there's a lot of people that kind of look down on it or that they'll outline the pitfalls. And there definitely are risks, mainly because you don't know what you're buying. It's almost like oftentimes you're just kind of throwing a dart at a dartboard of like, okay, this house has good numbers. I'll try buying this one, but you have no idea where it is. You have no idea who it is that's going to manage it. Those are all details, though, that we can get help on and educated on. And what I did is as I immersed myself into this investing methodology, I learned those things. Wow, these are the questions I like to ask potential turnkey providers. These are the questions I like to ask property managers to find out, what makes them tick? How big are they? What are their systems like? Can they handle problems well? So I started learning all these things and just came to realize that, you can go online, you can buy a wholesaling course from dozens of different people. You can buy courses on rehabbing houses, how to house hack, how to do BRRRR methods and do rehabs. But there's not really a standalone education about, hey, how's a good way to do turnkey investing? There's lots of materials out there, but most of them are offered by the people that are actually selling the houses. There's turnkey marketers. There's national turnkey marketers. I can even share some of them. There's Rent to Retirement. There's Narada. There's Maverick Investor Group. You can go to these websites and they have tons of blogs and educational materials. But at the end of the day, they have their inventory that they're selling. And so you're never quite sure, okay, so if you ask them, is this a good house to buy? They'll be like, yeah, it's a great house to buy. I kind of saw a need for kind of an impartial educational system that can help people through these pitfalls where I'm free to be honest. Yeah, you know what? This market is great. This market, not so much. This neighborhood is awesome. This neighborhood, I would not buy there. And this turnkey provider is really good. This one, not so much. I mean, aside from the specific recommendations, just having that toolbox of how do you vet these professionals? How do you narrow down with, if we're looking at nationwide across all the cities and all the turnkey providers and all the property managers and realtors, how can you narrow it down to build a star-studded investment team that is serving your best interest and get a system in place to where after you buy your first property, then it's so easy to buy your second and your third and your fourth.
Yeah. So let me jump in because I want to make sure that I'm understanding this properly. So the model that you follow is turnkey investment, which is something I've been in real estate investing. I didn't even know this was the thing. I knew I could hire property managers, but then we bought an investment property down in St. Augustine, Florida, and we rented out. But had I known about turnkey investing where I could come in out of state, didn't even have to look at the property, basically just working with a turnkey investor, I go buy it, they handle everything from soup to nuts. That sounds very appealing to me. But there was another thing that you mentioned that I think is also very appealing is you're buying at retail, which means you're buying at full market value, but you're still able to cash flow. So I think what that really speaks to is you're mitigating risk, right? So you're trying to bat singles rather than trying to hit a grand slam right out of the gate,
Yes.
which is really important for those of us who are trying to dip our toes in the water, right? Because, there's a lot of value to becoming a real estate investor. And now these pockets of the country have opened up where it makes sense that financially with all parties involved, that you can do turnkey investing for out-of-state investors while still trying to bat those singles. Did I hear that correctly?
The singles analogy is spot on. Even in some of the investor groups I'm in, we'll say that all the time. Just hit singles and, raise your batting average. It's not about hitting home runs. It's single after single after single. And after 10 years, when you've got 20 houses, then, you've won the game. And so That's really what it's all about. And it really is about mitigating risk. There are still risks because one issue with buying retail is, I'll just throw out, one pitfall is there are turnkey providers out there that maybe they put more money into a rehab than they thought. And just to be clear, at some point we can talk about what turnkey providers do and, what the background of this whole model is. But ultimately, these houses are freshly rehabbed. They are bought by another investor. These turnkey providers are just investors like us, but they are focusing on rehab, and they've scaled up their rehab teams to where they're doing like 100 or 200 houses per year, and they're selling them to investors. And so a common pitfall is maybe they put more money in the rehab than they thought. They need to unload it. And sometimes they will ask for a price that's higher than the market value. And it's, that's one pitfall. That's one disadvantage you'd see if you were to look into this. Well, again, that's where we get into, you can kind of ask the turnkey providers questions about, what happens when they have a dog? What do with it? Do they sell it? Do they just, and what happens when an appraisal comes in low? And there's different methods that, different answers you're going to get. Some will say, tough, you got to buy it at the price, and that's in the contract. And if you walk away, you lose your earnest money. Others are like, well, you're agreeing to pay up to like $3,000 more, but any more than that. So there's different answers and they're all different. And that's where it can become overwhelming to evaluate all of these variables and to overcome some of these pitfalls. So that's just one example of how we can do a deep dive into this niche, look at the pitfalls and the risks, and start to figure out, okay, how can we answer those questions and, mitigate those risks as much as possible?
I'm curious because we all know that there is a gabillion different ways to get involved with real estate. Obviously, that's an exaggeration, but there are many, many different ways to get involved with real estate. How did you discover turnkey investing, and why did you choose turnkey investing over all the other alternatives?
I discovered turnkey investing just by joining a group that was focused on it. It was actually, it's a group called Cash Flow Tactics. They don't focus on real estate. That's one of the aspects. It's more of a holistic. They have other concepts. They talk about infinite banking and, using infinite banking and then using policy loans to buy real estate. And it was just kind of a whole methodology. And that's kind of how I got started. But then I started to realize that this activity of buying turnkey real estate, as I said, it's filled with its own pitfalls. I felt lots of fears and, went on a journey to kind of navigate that. And so, yeah, so that's how I got involved and really immersed myself in it. As to why I chose it, I mean, it gets back to the fact that I have a career. I am a busy person. I have tried to get into real estate in other ways. I have tried to buy local properties. And the only way to make it work in my local market, I live on the West Coast. And so everything is just, super expensive here. And, I looked into no money down programs. I spent so much money on courses in like the 90s and the 2000s of, just buy money with no money down, buy houses with no money down. I looked into lease options. I learned about subject to, I learned about wraparound land contracts. I learned about all the things. And ultimately that comes down to finding motivated sellers. And so I thought, okay, I'll go and try to find motivated sellers. That's basically a marketing campaign. That's what you're doing. You're sending postcards, you're making phone calls, you're, hitting the streets, knocking on doors. And it's an active business. It's a job. And so I tried that for a couple of years and that didn't work. I just eventually reached a point where I just thought it just doesn't work. It doesn't work in my area. I'm just going to have to continue to pour money in my 401k, hope for the best. And that was the end of it. But then when I was turned on to this methodology of the, like you, I didn't know this existed. Once I found out it existed. And then once I dipped my toes in the water, got my first property, and it was like, that was so freaking easy. Then I jailbroke a bunch of my money from my IRA, and that's a whole different story. But I just went and went all in, and that's the place to be, because scale is the key. If we can, owning one property is very risky. If you can own 10, you're golden, because then it just the portfolio takes care of itself when issues arise. So that was my goal. I just wanted to get to as many houses as I could as fast as I could.
Yeah, that's wild. It sounds like this is kind of like a hidden opportunity that not many people are aware of. I mean, I think you mentioned this before. This is a relatively new kind of market within real estate investing. It's only kind of available in the South and was it Southwest and the South? Is that what you said, or Midwest and the South?
The Midwest and the South. Yeah.
Okay.
So think Missouri, Kansas, in Indiana, and then more in the South will be Tennessee, Alabama, Georgia, Arkansas. Yeah.
And is that just because like why those markets? Like what's so special about those markets?
Well, the why gets into market forces that I'm not sure I can fully explain, but I know that I've heard a lot of these markets called linear markets. They don't have the wild swings, either up or down. So in the big real estate crash in 2008, I mean, yes, prices fell, but it was more linear. It wasn't this exponential drop like we saw on the coasts. And then likewise, during the good times, just prices went gangbusters the last 3 years in California and Oregon and Washington and in the Carolinas and whatnot, all along again, those coastal markets. But these markets, it's just kind of slow and steady. So they're called linear markets. Why that is, I think it's based on just how the local economies work. There's a lot of blue collar, investment. There's lots of factory work. It's not so much, high tech. It's not so much, these booming industries of where it's boom or bust. It's manufacturing, it's shipping. I mean, Memphis is a popular market, and they're like the population center of the country. Like if you go in any of the cardinal directions, there's the same number of people. And so that's where FedEx and UPS and Amazon have like focused so much of their shipping, facilities. So it's blue collar workers. You're not having the IPO, people that are making their millions and then going and, buying extravagant houses and just, I don't know. It's just the nature of those economies, those blue collar economies that have kept the real estate markets just, they don't go crazy either way. They're just more linear instead of exponential.
Yeah, it makes sense. It makes sense that you're looking for kind of a stable market, right? I mean,
Right.
we all know that
Exactly.
down the coast in Florida and California, where you might see $500,000 home, swing up to 1.5 million, then crash back down to 250,000. So
Exactly.
yeah. Well, that makes sense. All right, cool. Well, so how does your system work and how's it different from like everything else? Right. So obviously, you do turnkey investing, but like how have you been so successful with turnkey investing?
Yeah. So I already talked about it a little bit in that what makes this work is that this is a kind of an impartial education. This is, you know, like I said, there's lots of free resources you can utilize, but ultimately you're making the decision to pull the trigger and you're kind of doing it all on your own. And if you ask somebody whether you should buy this, the only people that you have to ask are the ones that are selling properties. And so if they're selling the property, they'll say yes. If they're not, then they'll say, well, I don't know, I've got a better property here. So there's just a lot of push and pull. And so really that's just the fundamental of what I think I'm offering. I'm purposely not partnering with any turnkey providers. I know that's a popular thing for a lot of, there's other kind of educators out there and they'll, try to buddy up with turnkey providers. So it's, hey, come work with me and I'll get you properties. And I'm just trying to stay away from that. So it's really just that impartial analysis. And then beyond that, it's really just, and like I said, answering those questions. It comes down to one of the key key things I emphasize in the materials is, mastering property analysis. And the property analysis goes beyond just the financial numbers. We can all estimate the rent and then plug in numbers for the taxes and insurance and then come up with estimates for maintenance. That's actually the easy part. What I found is that the analysis goes beyond that. And it really, I focus on three things in the analysis part. And it really comes down to number one is who you're buying from. Normally, if we're buying a house, we don't really consider that, but that gets into what I talked about. There are turnkey providers out there that are very good. There's others that are maybe not so as good. And so who you're buying from really matters. And so that's one thing that I really key on. The second piece is where am I buying? And of course, we all know location is very important. Those go hand in hand because if I find somebody that I like working with and they are very successful and have a very good track record, and I ask them, and they say, hey, I've got a house for sale in this area that does very good for our investors and has a great track record, then it's like, boom, okay, that's great. I'm not, I don't care so much about where it is because I'm going to trust the word of who I'm buying from. So with that said, again, the where is very important because there are some areas, it doesn't matter who recommends it, I would stay out of. In fact, there's a couple zip codes that I know are extremely popular in some markets I'm in. Some turnkey providers that I really like sell a ton of houses there. But I visited those areas and I'm like, yeah, no, I'm not buying there. So that's important. So there's the who, there's the where, and then there's the what. And by that I mean the type of property. And there are some areas, not all, some areas you can buy any house in an area, it's fine. But there are some areas that are maybe a little more marginal that, maybe 80% of the homes are like 3-bed, 1-bath. They only have one bathroom. And if you buy if you buy one there, it's a bit of a crapshoot whether it might work out. But if you can get one that has maybe like 2 bathrooms or maybe 4 bedrooms or something that sets it apart and can attract a higher demand and maybe get a better quality tenant, then that's the other thing I found. And so I find myself perusing properties. And by the time you get in this, my inbox gets flooded with properties for sale because I get on mailing lists from these turnkey providers. And so every week they email me the inventory. And so I am just constantly filtering, okay, here's all the properties for sale. And I quickly see, okay, who is this from? What zip code is it in? And then based on the zip code, sometimes I'll say, ooh, that's a good price. Oh, it's a 3-bed, 1-bath. Nope, not interested. And you just learn to start filtering things out. And so that is what I teach people how to do in specific markets. And, right now I have a pretty deep knowledge of 2 or 3 markets. And what I'm looking forward to is over time, kind of, improving my knowledge, which I would then pass on to the people that are in my community and working with me. So I have plans in the next year. I really want to do a deep dive in Kansas City. Last year, I visited Columbus, Georgia, and Montgomery, Alabama, and did a deep dive there. So that's kind of my plan going forward, is just really, going and immersing myself in these markets, and then turning around and sharing that with my community and the people that are working with me.
Yeah. So I love what you said. When you talked about like finding ideal properties and really mastering the property analysis, you broke it down into three things. It was, number one, who are you buying from? Like, what are the turnkey, there's good turnkey providers, there's bad turnkey providers, which experience will tell you, which ones to use. Number two, where am I buying? So location, right? And then number three, what type of property am I buying? Like, those are the three key things. And obviously, it helps to have experience. It helps to be talking to a group or, mentors or advisors who know a lot of those answers to help shortcut the process. Is that right?
Exactly. That's the idea. Get a shortcut.
Cool. What kind of skills do I need to actually make this work? Right. I'm green. I've never done turnkey investing in the past. Now, I have personal experience with some form of short-term rental real estate, but I've never done turnkey investing. So what kind of skills do I need to actually make this work?
Man, I don't really think it takes a lot of skill. I would say the biggest prerequisites, clearly you are going to be, calling some of these professionals up on the phone and having conversations and kind of vetting them. And so just, being willing to take some time to pick up the phone and call and have a conversation and make a contact and make a connection. Because ultimately that's where this success lies, is in making a successful connection with, quality professionals. And so that's really what's involved in terms of, I provide tools, as part of the program. I have a spreadsheet that's a property analysis calculator. You just punch in the numbers and it puts out a 10-year projection. So you don't really need to know math very much. You don't, there's a lot of automated there. I would say probably the biggest prerequisites, the biggest thing that might keep people from pursuing this is that, it requires capital. This isn't a get rich quick thing. This isn't a forced equity issue where you're getting it for no money down. There's no magic here. You're getting a loan from a bank, so you need a decent credit score. Above 720 or above is ideal, and you need investment capital. Now, the good news is, because these houses are so affordable, you need less investment capital than one might think. And so, I would say that there are places where I would still buy houses that cost about $100,000. And so 20% down would be 20 grand plus $5,000 in closing costs. So you could get started with as little as 25 grand. Now, some people would balk at that. That's kind of why I focus this towards engineers like myself, and just working in the high tech of, because every year, I get bonuses, I get RSUs, I get, sometimes stock options, a profit sharing. So this is money that I started funneling into these real estate investments. And beyond that, if you can get that capital, and if you have a decent credit score, it's just a matter of just putting in a little bit of time to make phone calls and then, do some property analysis. It's just kind of making some time in your spare time. Skill wise, it's kind of brain dead. I'll be honest.
Well, what I will say, rather than focusing on the skills that you need, I would say, focusing on the skills that you don't need. You and I both know that getting into real estate, you mentioned it earlier, it's essentially like, if you want to go acquire some of these properties, you got to run marketing campaigns. So like, it's an active business where you are, cold calling, dealing with tons and tons of rejection, putting up bandit posters, bandit flyers, and sending postcards, trying to generate leads to find motivated sellers. That's a ton of work. And I would say that this is a great opportunity, because you don't need that skill. This is not becoming a salesperson. This is not becoming a marketer, a world-class marketer. Go find these properties and then close these deals, and then figure out all the other, things that you have to do with flipping that house or acquiring that house, right? This is now, okay, let's look at the inventory that's out there, and where's the best place that I can put my money as an actual investor. So this is true, real estate investing from an investment standpoint, an investor standpoint. I mean, this is why it's so great and why I love talking to you, Jim, is because this is truly for working professionals who want to get into real estate, but don't want to have to deal with all the other stuff that most people deal with traditional real estate. So I would highlight that like the number one skill that you don't need is marketing and sales, which you really do need with almost all of the other real estate ventures out there.
When you think about it, what is a house? A house is a bunch of systems all within, on a piece of land. And so there's a kitchen, there's structure, there's appliances, there's landscaping, there's all these things that need to be worried about with the property. And so once you do have it, now you suddenly need to, okay, how can I get the property ready to rent? There's the management side of it. There's all these things that everything's offloaded. It's all handled through either the turnkey provider takes care of it, or after you buy it, the property manager takes care of it. And you're buying in a place at a price where the property supports all of those expenses and leaves you $200 or $300 a month left over each month.
Now, Jim, I've got a few other questions I want to ask you, but before I get there, where can people go research, or where can they go connect with you? Like, where can they learn more about, cash flow engineering? So let's drop a link real quick in case people are like already, interested in reaching out to you, and then we can dive into the other questions that I've got for you. Where can they find you?
I would say the easiest way is looking me up on Instagram, and I've got a link there that you can, drop me your name and I'll give you some free resources. But on Instagram, I'm at the cash flow engineer. And that's probably the easiest way. You can also look me up on LinkedIn, because I've been working with a lot of my coworkers and former coworkers are reaching out to me. So I've been very active on LinkedIn. So you can, again, my name is Jim Beavens. So you can just go to LinkedIn and search for Jim Beavens. You can also look for cash flow engineers and find me on there. That's probably your best way. And right now I'm kind of sharing my story, and that's the best way, is just look me up on Instagram or LinkedIn.
Awesome. We'll put some links in the show notes below as well. So let me ask a couple other questions that have just kind of popped into my mind while we were chatting. So what do most people believe that you have to do to be successful with this? Like, what are some of the existing beliefs and of what's holding them back? Like, oh, I could never be successful with turnkey investing because X, Y, Z.
For a lot of people, it's just the simple fear of investing so much money in an asset that is like 2,000 miles away. And then also leaving the management of that asset up to somebody else. It's the fear of giving up control. We feel like, oh, I have to manage this. I have to screen the tenant. I have to do everything. And this is my property. And so that is probably the biggest thing that people are afraid to give up, is that control. At the same time, it's some of the fears that I talked about before. Like, it's, what if I bought a house with a crappy rehab? What if the property manager sucks? These are the pitfalls that we have. What if I bought in a crappy area that is, it's going to get vandalized all the time? So it's all those what ifs, because we think of real estate, and especially buying a house in an area that we're not familiar with. That's all those fears come up. But that's why I kind of created this program. It's like, well, let's go through each one and let's answer the question of how to maximize the odds that we don't fall into that pitfall in that specific domain.
Yeah. I'd say fear of control is a big one, because, it's that happens with everybody. If unless you are super experienced and you're totally comfortable with it, you get it. I know that's a big one for us. My wife and I, when we started investing in real estate, I wanted to go invest into more because I don't have a problem with giving up control, but I'm an entrepreneur. So I've done that my entire career. My wife, has a very hard time with that. She's like, no, I need to be there. I need to be involved. So we cannot be doing more real estate because I just can't handle it. And so I think that's a very, very valid concern. So if somebody is going through those conversations, maybe it's with their partner, their spouse, and maybe they are in it, Like they don't have a problem with giving up control, but they need approval they need buy-in from their spouse. Like, what would you say to that? Like, how would you help explain to someone, ease their fear over the control issue?
That is a great question. Honestly, I think the easiest way is just to share some stories of what is possible when you make a good decision. And because I have some situations that, are real horror stories. I mean, there's just as an example of last holiday season, one of my properties is in Memphis and they had a big freeze. We actually had a big freeze throughout a lot of the country. And one of my houses, the pipes burst and flooded everywhere. And I got an email from the property manager. Actually, they first sent out a global email, a global video to everybody saying, hey, this happened in Memphis and a bunch of our properties are flooded and we're working on it. And I was like, oh crap. And then I got a personalized email and realized, yep, it's flooded. They got to fix it. But my experience of that though was I just got like 3 more emails. My next email was like, we're on it, we're fixing it. And, we're working with the insurance company. This was all the property manager. So the property manager would just sent me updates and, eventually they sent me a bill, how much it cost, but they said, don't pay this because the insurance, we've already made the claim. And I ended up getting a check from the insurance company that was more than what it cost to fix. And I actually got to pocket some of that difference because this property manager, they were also the turnkey provider. So they had construction teams and they were able to do these repairs basically at wholesale. And so that what should have been like a horrible experience, this major headache, like I can imagine, like if I owned a property, in my city and its pipes burst, then it's like, man, I would just be going through hell. But just that experience of working with a competent quality property manager that just handled everything for me. I read the email and I say, okay, go team. And then I move on about my day and it's all just handled. So that's where the lack of control, it was a huge blessing. And again, it's finding those quality team members that's important. That's where we make those. That's why we're making those good connections is really super important. So it's a tough question. People are going to have those fears, but I would just flip it around and say, yeah, that's all great when things go good, but when things go bad, are you really the best person that's qualified to handle this? Are you the best person that's qualified to find a quality tenant? Are you the best person that's qualified to oversee a rehab? And that's why, in so many parts of our lives, we turn important things over to professionals that are empowered to handle it. And this is no different. So,
yeah. And I think the big takeaway that I have from there is if you don't want to alleviate that fear, go it alone, try this alone. Because I think that the biggest takeaway that I learned from that entire story is, you chose a great team to work with. You chose, you knew a great, turnkey provider to work with. And when they were put to the test, they came through in a huge way. And that's part of the value of having experience in the space. If you're going this route with turnkey providers, it's almost like one of the most important decisions that you can make is knowing what are the great partners to work with based on past experience. So again, it all comes down to having the right team to work with, having the right advisors, having the right mentors to guide you in the right direction to alleviate that fear of lack of control. And, out of curiosity, how much more confidence do you have in the whole system once you experience that and you saw it get pushed to the test?
Oh, immense confidence. It makes it a no-brainer. Now I see houses that they have for sale. And I'm just bummed that, I wish I had more investment capital. I wish I could buy more. It almost becomes like, picking a stock it becomes in that simple in my mind. I don't even think about, who's going to manage it. And, if it's in an area that I like and at a price that's attractive and, and the rent is good, man, there's no question in my mind. It's all confidence. There's no fear. It's just a matter of it's all a mathematical equation at this point and, looking at a map.
I mean, it kind of sounds a little too good to be true, right? Why does this really work? Like when I say it sounds too good to be true, it's like, I don't know, like the engineer in me is starting to dive into all the numbers. Like, okay, well, how does the turnkey provider make money? And like, we're buying it at retail, and how are we making money? And I look at like the entire scope of the business because I'm in it, also a former recovering engineer. So I like to go deep in the nitty gritty, but it does sound just like too good to be true. Like, why does this work for all parties involved, particularly as an investor, a potential investor?
Yeah. So, in terms of how the whole deal structure ends up working, ultimately it goes back to kind of the history of how these turnkey providers came to be, because they were really born out of the 2008 crash. And all they're just rehabbers. They're just real estate investors like any other one. They've built a business doing the classic, rehab and flip. And they are buying a junky house from a motivated seller. They've got the marketing systems in place. They're finding those motivated sellers. They're finding those crappy houses that need a lot of work, and they're buying them for pennies on the dollar. And they're putting in 20, 30 grand. They're putting in a new HVAC, a new roof, a new countertop, new floor, new systems, and getting that up to that retail price. And then they're selling to retail buyers. And that's been happening for decades and decades. That's the classic real estate process in America, right? Well, in 2008, prices plummeted. Nobody was buying houses. Nobody could buy houses. Nobody could get financing. The market dropped off a cliff. And a lot of these companies had businesses that they were still buying houses. They had teams. They were still rehabbing. But what happened was prices fell off a cliff, but the rent stayed fairly stable. And before long, investors started to notice, and they said, hey, I'll buy your house. And a lot of these companies shifted, instead of selling to retail homeowners, they sold to investors. And pretty soon Wall Street took notice and they got involved. And this is around 2012, 2013. Hedge funds started calling up some of these turnkey providers, and they started asking questions like, hey, we want to buy 500 homes this year. Can you make that happen? We want to buy 1,000 homes over the next 3 years. And some of these companies, they took up the call, and they scaled up their rehab teams. They scaled up multiple teams. They scaled up their acquisitions. They started building in-house property management. So now they weren't just doing the rehabs. They started scaling, and they started managing their own properties and then managing them for others. So this is an industry that kind of popped up as the whole market was really depressed price wise, but rent wise, it stayed fairly stable because people still need a place to live. Mm-hmm. So that's really how this all works, is these are companies that have scaled up their systems, their marketing systems, their rehab systems, and their property management. And so they can buy the cheap house. They can buy a house for 30 grand. They can put 20 or 30 grand into it, and they can sell it for 100 grand. And, and depending on the neighborhood, multiply the numbers. They might buy it for 100 grand and they put in 30 grand and they sell it for 200. Just, so that's where the money's made. And then us as investors, we're retail buyers. We're buying it at retail, but because the price supports the rents, even at retail, then we can make that cash flow. And then what makes it a good deal for us, we don't get that instant equity. We don't get that the turnkey provider may have made 50 grand on the sale. We're going to, we get maybe 200 or 300 a month. But what we have is we have the power of leverage. We have the power of the tax savings that we get. And of course, then the cash flow. And so when we get in, and yes, we're buying at retail, but we're only putting 20% down. And that bank I look at it, and we all talk about a 401k doing a 1-to-1 match. In reality, a bank is giving us a 4-to-1 match on our money. And so we can take our money and buy this asset that's worth 4 times as much. And that leverage, even though a house might only appreciate, say, 3% in 1 year, because of that leverage, that 3% appreciation gets multiplied by 4. And now it's actually a 12% appreciation. And our cash on cash, we may put in 25 grand. And if we only get 200 a month, that's 2,400 a year. That's about a 10% cash on cash. We get the mortgage pay down. That's an automatic about 2.5% per year that just we build up equity just through the mortgage pay down. And then we have a tax savings on top of that. And so pretty soon we're looking at a total return of, around 25% on our down payments just through all these different profit pillars. So in a way, I mean, I'm not really answering the question of in a way that almost sounds too good to be true, but that's how all the numbers work. Everybody's making good money along the way, but that's the power of real estate. I mean, that's the beauty of real estate. That's why it creates so much wealth, because all of these different stages, there's an opportunity to make money. We're just making money at the back end over a long period of time without any time or energy, just putting the money down and letting somebody else manage it. And in 10 years, it's appreciated. The cash flow is a lot higher. Now we can do cash out refi. We can pull money out tax free, either through refinance or a 1031 exchange, and just have all these benefits.
That's wild. You mentioned the three profit pillars, and I want to highlight them again because this is something that we talked about on our previous conversation. Which,
actually four profit pillars.
There's 4 profit pillars. Okay, so I'll have you repeat because I know I'm missing one. When we had our first conversation, I remember you talked to me about this, and I'm like, oh man, like it's kind of like it makes me want to get into real estate, like more real estate, because of all the different profit pillars. So you said there's obviously the built up equity that you as the retail owner, as the owner, you get to accumulate. Like for however long you own the property, you get to accumulate whatever equity, right? So that's the first thing. Then there's cash flow that you acquire from your monthly rent. Then there's tax strategy, right? And tax savings that you get just from owning real estate that the government, awards you because they value, real estate investors, real estate property owners. And what's the fourth profit? Is it leverage? Is that the profit pillar?
Leverage in the form of mortgage pay down. Yeah. I mean, that's how it shows up as an actual return. But yes, leverage is kind of one of those.
What does that mean? Leverage in the form of mortgage pay down. Can you just dive a little bit deeper in that and explain that?
Yeah. So you borrow 80% to buy this investment property, and now you rent it out, and now you're going to pay the mortgage with the rent. Well, that's amortized over 30 years. So it's just the principal and interest. So every month your principal is getting paid down a little bit. And, it amounts to, again, if you look at like $150,000 house, in that first year, you may pay off like about $1,300 or $1,400 in principal. So that's about, whatever that is. That's like 1%. I don't know. There's some percentage of no, sorry. No, it's over your down payment. So if we put in, I don't know, $35,000 and we're getting $1,300 or $1,400, that's about 2.5%, 3% that you're just getting automatically, no matter what. I mean, that's guaranteed. And again, even though we're making the mortgage payment, it's being covered by the tenant, and so that is part of that return.
Yeah, and there are not many investments where you profit 4 different ways as an investor, and that's I think that's why so many people are so attracted to real estate, is because of all these compounding returns that you get as a real estate investor. I love it.
Right, and it works 2 ways, because when they all work together, yes, the returns kind of get obscene. I mean, when there's appreciation and cash flow, and then that cash flow you get tax free, and so that's kind of like a boost to your returns that you would otherwise pay, and you get the mortgage paid out. It can get kind of obscene. But the other side of that is, we call them profit pillars because they're kind of holding your investment up. And so the other side of this is that if one of those is not happening like the way you want, maybe you have a vacancy and you have a make ready and the cash flow suffers. Maybe we have another 2008, or, maybe the property value is just, stagnant. Then we have those other profit pillars that all kind of make up the difference and help hold it up. And so instead of that obscene 25 or 30% return, if everything's working, now, I only have to live with the 10% cash on cash. Or, I had a vacancy, but man, look at this. Over the last 2 years, it's gone up in value 10%. And because I only put 20% down, I've made, my down payment has like been doubled. So all of these are there that work regardless of any of the other ones independently. So it not only boosts the returns, but it lowers our risk, because now if a bad thing happens, then we've got other parts of the deal still holding it up and making it profitable.
Jim, how fast, let's say I want to get started, right? I want to, I'm very much interested in turnkey investing. How fast can I start to see results? If I'm understanding the process clearly, I find a great partner, right? I find a great turnkey provider, look at their inventory. Once I find a property that I'm seriously considering, how long does it take to kind of go through the process, and how fast can I start to see, some initial results?
Yeah. So when I started sharing what I was doing, I kind of put it in a package that I called the 6 weeks to cash flow challenge. And my goal in that was, by the end of the 6 weeks, the people that go through it should be empowered to get their first out-of-state rental property under contract. And the results I saw is that I saw people get their first property under contract in about 4 weeks, which is about, because the last 2 weeks I kind of focus more on asset protection, because I go into LLC structure and some of the post contract closing tasks we have to do. But really, that 4 weeks, that pretty much allows enough time. There's the in terms of what needs to happen. The first step is getting pre-approved, and so working with the lender to get pre-approved, that may take a week or so, depending, and then just reaching out, making connections, getting familiar with the different providers, and again, just analyzing properties, learning how to do that analysis, determining where the right markets are, the right neighborhoods and so forth that we have available that are recommended. And but pretty much in that matter of weeks is what my experience has been, having people start from no knowledge of this, getting immersed in these materials. And, that 3 to 4 week time frame is about, when if you are all in and putting in the effort and making those connections, that's about what I think most people can expect when they get into this.
And that's super compelling. So we're talking about like being completely green, not having any experience in real estate, and being able to get your first property under contract in 6 weeks. Like that is,
or less. Yeah.
6 weeks or less, right? That is extremely compelling. I mean, that's like getting, a master's degree in, investing in real estate investing in 6 weeks or less, being able to get your first property under contract. That's phenomenal.
Right. And then the compelling thing is that once you do that, everything you need to know to just do it again and again. And that's where the final piece of this is scaling that up. And, one of my clients, it's been 6 months since they went through the program, and they recently got their fourth property under contract. Wow. So just in a matter of months that, their portfolio is big and growing.
Yeah. Jim, how does someone get started? How do I get started with this? Where, is it simply just reaching out to you, or what do I do?
Yep. The best way is to reach out to me. Look me up on Instagram at the Cashflow Engineer, all one word. We'll have some links. You can reach me out there. There's a link that you can send me your email, and we can book a call. Basically, that's the best way, and I'll include a link to my calendar if you want to book a call right away. I'm happy to. I just love talking shop. I love talking real estate, so I just like to talk to people about this stuff. So, if anybody has any questions, we can give them a link to my calendar to book a call. And in the meantime, you can follow me on Instagram, follow me on LinkedIn. I'm sharing my story, sharing all the various success stories I've had. It's really exciting. I've got one guy that's selling his house in Oregon that he's had for like 15 years. He's got a ton of equity, and he's doing a 1031 exchange, and he's going to end up with 13 new construction properties in one of our favorite markets from one of our favorite turnkey providers. And he's going to quadruple his cash flow. And so, those are the kind of success stories that I'm sharing. So I'm looking forward to people just kind of following me and share what I'm doing.
Love it. Jim, this conversation was so inspiring. It was so motivating. and really opened my eyes to the world of real estate investing. Even though I've already talked to you, we've already talked about this, but it's like sometimes you just got to hear it again and again to really start to comprehend it. But I love the opportunity. I think turnkey investing is an excellent opportunity for those of us who are, not wanting to go full time into this, but wanting to dip our toes in the water. We understand that there is immense potential, immense opportunity with real estate, but we've been just kind of nervous or not knowing how to take that first step. I think this is an amazing opportunity. So we'll drop links in the show notes, and we'll drop links on this page as well for where they can connect with you for to learn more about the cash flow engineering. And Jim, as always, it's been great, man.
Awesome. Thanks for having me, Joel. This was a lot of fun. I appreciate it.
Awesome. Take care. We'll see you soon.